Morning to all. Today we are going to see tax. A tax is a mandatory fee or financial charge levied by government on individual or an organization to collect revenue for public works, providing the best facilities and infrastructure. The collected fund is then used to different public expenditure programs. The tax is classified into two types. One is direct tax and another one is indirect tax. The direct tax is paid directly to the government by the taxpayer. When you earn income, you are responsible for tax payment and you also have the burden. There are 5 types of direct taxes are available. First one is income tax. Income tax in India is payable depending on the earning and age of an individual. Income tax slab rate are notified by the government of India and determine the amount of income that must be paid. The taxpayer must file income tax on an annual basis. The next one is wealth tax. This type of tax must be paid on an annual basis and depends on the market value, the property and the ownership of the property. If an individual owns a property, wealth tax shall be paid even if the property does not generate any revenue. Next one is corporate tax. Domestic companies, apart from shareholders, need to pay corporate tax on their income in India. The foreign organizations that earn in India will also need to pay corporate tax. Income earned through the sale of assets, the technical service fee, royalty, dividends and interest which is based in India is considered taxable. Next one is capital gain. This is a type of direct tax which is paid on income earned from the sale of asset or investment. Investment in property or business shares, mutual funds and bonds are considered as capital assets. Based on the holding period, capital gains tax can be classified as short-term and long-term capital gain. The second type of tax is indirect tax. The indirect tax payment is received by the government from the seller of goods or services. These tax are consumption based that are applied to goods or services when they are bought and sold. Custom duty. Custom duty is applicable on the goods which are imported into India from other countries. In some cases, it is also levied on the goods being transported out of India. The next one is service tax. Service tax is applicable on the services provided by a company and paid by the recipient of their service, collected by and deposited with the central government. Value added tax. Value added tax, popularly known as VAT, is levied on the sale of movable goods or goods sold directly to the customer. Value added tax is exactly by the respective state government on intrastate sales. The next one is excise excise duty. Excise duty is levied on the goods produced or manufactured in India, paid by the manufacturers of different goods. Excise duty is often recovered from the customers. The next one is stamp duty. Stamp duty is levied on the transfer of immovable property located within the state and is charged by the state government and may vary in rates. It is also applicable on all legal documents. Now we are follow goods and services tax. Some of the indirect taxes are subsumed under goods and services tax. Central tax subsumed under GSTs and state tax subsumed under GST. The general tax subsumed under GST is service tax, central excise duty, additional excise duties, additional custom duties, special additional duty of customs, central sales tax, surcharges. Then state tax subsumed under GST is value added tax, sales tax, entertainment tax, luxury tax. So what is GST? GST is known as the goods and services tax. It is an indirect tax which has replaced many indirect taxes in India, such as the excise duty, VAT, service tax, etc. The Goods and Services Tax Act was passed in the Parliament on 29th March 2017 and came into effect on 1st July 2017. There are four types of GST. One is Integrated Goods and Services Tax, State Goods and Services Tax, Central Goods and Services Tax, Union Territory Goods and Services Taxes. Thank you.